So, I think I touched upon this a little bit earlier. What do VCs look at? I think you sit down with a VC, you're having a conversation, trying to read the guy's mind. You're saying, look, what is he really thinking about? And, we're trying to assess a lot of things, but really our business works if we can create a great outcome in the next 5 to 6 years. So a lot of our questions, will be about you in terms of trying to understand who you are, but equally we're trying to assess, can this generate a large exit for us, right? That's just how our business works. So how large, depends on the size, stage of the VC, what are the implications in terms of us putting money in, when we talk about valuation, if you're saying, look, I expect to dilute only 20%, just recognize that the outcome will need to be that much larger. So revenue profits have to be of scale for us to actually get money back. In India, for instance, it's hard to take a company public, at less than, call it order of magnitude, 100 million in revenue. Probably if you want institutional investors, you need to be, EBITDA positive. I think outside of India, you can take companies public that are losing money but growing exponentially. The Indian markets will not let you take a company public like that. So you have to also assess, look, what are the prospects of me exiting in India or exiting outside of India? Because the dynamics of the business tend to look very different. Exit multiples. So I'll give you an example. Retail, regular retail, has a 1x or less than 1x multiple on revenue. E-commerce in a market like China has a 5x multiple, right? So there's a big difference between being positioned as a regular retailer and an e-commerce retailer. And if you go by the multiples in Indian e-commerce, that's a different number altogether. I'm not going to go there. The other thing we like to have is the ability to have the notion of degrees of freedom on exit, right? So one is to build a really great business. The other is to build a great business that somebody else might want to own. So we've had this conversation in the context of e-commerce. So if you take a Flipkart and an Infibeam, there's a lot of questions around, when Amazon comes to India, who will they take, right? Because I think part of this is, you can think about Flipkart going public, or you can think about Amazon buying Flipkart to accelerate its time to market by 3 to 5 years. And we've seen that as global majors come into India, I think one example of this was, in the old days when eBay bought Bazi to jumpstart its business, right? But I think you're starting to see that happen more and more. As global majors start to wake up to India, the challenges of building from ground up are significant. So they will look to buy, right? We don't necessarily coach our companies to say, look, be an attractive candidate, but we like to pick verticals within which we think there'll be a lot of inbound interest. Domestic M&A we've not seen enough of. Unfortunately in the US, great little technology companies get acquired by much bigger technology companies. We haven't seen enough of domestic M&A, and I'm not sure we have the mindset to say, look, somebody's built a lot of value here, let me just buy it. There is this notion of, let me build it myself, right? So we'll see, hopefully I'm wrong, but generally the M&A that we see tends to be cross-border. So, what is the DNA of a VC fundable business, right? I'd say from a weightage perspective, teams probably, 30 to 40% of it. And I'm going to, I'll dive into each of these. Obviously a large market. Now, if the market's already large, you typically need to disrupt it. If it's small, it needs to be growing at double or triple digits, right? Because otherwise, there's no trend to ride on and you can't grow with the market. The whole notion of a value proposition, right? We're not big fans of if we build it, they will come, right? We've seen enough of those. And the point really is that, look, bring us a real deep insight, right? It could be a deep channel insight. It could be a deep consumer insight. It could be a deep business model insight, right? And you look at, multiple value propositions, but please bring an insight because, for us, we look at people and say, who's your competition? It's like, I have no competition, right? So that's one challenge, right? When people believe they have no competition. The other is when they're not able to clearly articulate their value proposition, right? So we'll talk a bit about that. You've heard this term scalable, right? Everyone says, look, is the business scalable, right? And really, part of it is speed, right? Can you grow quickly? And part of it is, do we need to keep putting in $1 to make 2? So ideally, at some point, I'd like to put in 0.75 and 0.5 and 0.25, right? So is there any operating leverage in the model where you don't necessarily scale your cost structure linearly with your revenues, right? And we'll discuss that. Defensibility, I don't think there's anything permanently defensible, right? I think innovation is important, but there is a notion of what network effects, right? So if you can build a model where people start to become dependent, buyers and sellers, there is real value, and certain categories, like classifieds, have significant network effects, right? And it feeds upon itself. I'm not sure necessarily that a classic e-commerce business has network effects. You will need to work really hard to demonstrate that. There is some first mover advantage, but the burden is you have to build the category. So if you put on your TV every night, Flipkart's doing a great job of building the category. Now, hopefully, some of the benefits will accrue to them.